The mindset is that our money still safe in the bank if you are a US citizen.
Yeah, but I think what they felt that they want to bring their funds into Singapore.
Okay, so today we're gonna talk about the latest bank issues that's happening in US.
They say the bank crises are all accelerated by the newest generation, which is the Twitter generation.
Specifically, SVB Bank, Silvergate Signature Bank, as well as a little bit on Credit Suisse, interest rates, what are the Fed going to do, are they going to pivot, as well as a final topic on the rise of Bitcoin.
In future, in the long run, it depends on the market adoption and what are the use cases that you can use the Bitcoin for.
Power Rangers
Power Ranger, there's a Netflix Power Ranger, new one. So who will Melvin be?
The color?
Who is
please.
Who is?
I thought it should be White Ranger.
Today is supposed to be cardigan day, I brought my cardigan.
No,
Red Ranger very handsome one eh.
Stop it lah.
We have a special guest today.
Okay, yes, we have a special guest. And of course, today is supposed to be cardigan day, I brought my cardigan.
But it's okay, we have too many cardigan already. Just make do without the cardigan.
But it's extremely warm, so I decided to take it off. Is this a new cardigan?
No, it's the same one from 2-3 episodes ago.
Great. Alright, welcome back to episode number 5 in our banter series. So today we have Marc with us in the house. And hey, Rong, you had a WWF introduction for him, right? Come. And just now Rong was saying that today's the smell of alphaness and
I think this hand texture better
Testosterone,
edit.
is it?
阳气太重啊 or what? 阴阳啊 You study feng shui, is it?
You this kind of question lah, very hard to continue.
Okay.
I just introduce Marc.
Okay, great, come.
Standing 191 cm, our tallest human being in PLB, Marc Chuan Jia Ye.
Yay!
Okay, hi everyone. Yeah, so I'm Marc. I'm the director of sales at PLB. Yep. So happy to be here with the rest of the guys. Yeah.
Great, how was your prep for today's banter?
Quite stressful, quite heavy topics. Yeah. So yeah, I was just watching some YouTube videos of I think CNN, Bloomberg, some reviewers and stuff like that.
Right.
Yeah.
Great. Awesome. Good to have you here. By the way, just a fun fact. After the last episode with Beatrice, and I met her during one of the home tour in, where was that? Holland. Yeah, then she was sharing with me that she was caught several times by her family members because when they walked past the toilet, they heard her listening to CNBC News about all the bank crisis and all that. So after our last round of banter series, that got Beatrice very interested in all the latest happenings with Fed, with bank collapse and stuff like that. So well done, Beatrice. We'll see you back on the next episode. By the way, Beatrice is team what? Let's have a look at our new producers, Cam and Angle. Give them a round of applause. Woo! Then Beatrice belongs to team what?
I think she belongs to Team D.
Team D, right. So do you want her back in the next episode? By the way, Dan controls the attendance. You want her back?
Definitely. I
Great.
think it was a fun episode the last time she was here.
Alright, awesome. We'll have her back, provided Beatrice you give us cupcakes.
Actually, you do realize that like you're just having fun, right? All this will be cut away.
No, all these are in. You look at the latest. Hey, Dad, tell you on the latest episode. I want to show him a little bit of snippets.
No.
Shall we?
Rong, why are you so stressed, Rong? Why are you so stressed?
We're gonna have a look at all these topics, and when we released these topics, everybody got frantic, and I think CNBC got a rise in viewership from PLB over the last 2 weeks. So, okay, we want to talk about the latest bank situation in US in March. So in March, there were a couple of very concerning news that sprout out over SVB Bank, Credit Suisse, Silvergate, as well as Signature Bank. All right. And of course, interest rates has been one of the latest topic because all this came before the Federal Reserve meeting on whether should they raise interest rate. And I think we talked about this over the last episode, like will the next interest rate rise be 50 basis point or 25 basis point? So what happened was that after all this situation, the basis points were raised by 25 instead of 50. And now, at the point of recording, we're at the tail end of March, a lot of people are predicting that the next Fed meeting, there's not going to be a rise in interest rates anymore. It's going to be a pivot situation. And of course, what is going to happen is that now, Fed Reserve in US is in, I would say, a very sticky situation. So what situation is this? Is that this quantitative tightening was meant to bring down inflation. And for Fed to come up with this monetary policy, basically in order to bring down inflation, they have to raise the interest rate in order to bring down inflation. But when they raised the interest rates over the entire 2022 till today, a lot of people are saying that this strategy has brought about too quick a quickening of the interest rates rise. And because of this, what is happening now is that this is affecting the banks in terms of the kind of bonds and treasuries that they're holding. And of course, that's exactly what happened to SVB. So maybe George, bring us through what happened with SVB.
So I think the key takeaway for SVB, just to give some context, they are the 16th largest bank in the United States. And that was shut down on March 10, 2023. So I think there's several factors that contributes to the meltdown. I think number one is because there was a lot of people that rushed in to withdraw the cash, partially because it is being accelerated with the impact of the FTX, and then people start to withdraw the money from the banks. Secondly, it's also because I think what the banks are doing is with all the deposits that they have, they buy into long-term bonds.
Right.
So the impact of the long-term bonds is that when they buy into long-term bonds, just to again give some context, in Singapore, last time when SIA was having a bit of market slowdown, they also introduced bonds, right, to open up to the market to raise some funds. So when bonds are being released, sometimes the interest rates are on the lower side, but they have to pledge in for a long period of time. And with the interest rates rising, some people want to withdraw the cash, and when they have to withdraw the cash, in order to meet the demands from the depositor, they have to sell away the bonds at a loss. So I think that, partially accelerated the happenings at SVB.
Right. To add on to Silicon Valley Bank, Silicon Valley Bank is a bank that has majority of its deposits that were being contributed by 30 over different accounts. And of course, a lot of these accounts were startups, tech startups, including Roblox, including a lot of the big names in the startup world. Yep. And what happened was that in 2020, when there was quantitative easing and interest rates were at an all-time low, the amount of deposits in the bank swelled to a very high level. And of course, as a bank, right now, in our fiat system, basically banks practice this thing called fractional reserve banking. And fractional reserve banking means that in terms of lending, you're allowed to loan out close to about 90% of what you have held in terms of deposit. So for example, if let's say somebody would place a deposit with me at $1,000, I'm allowed to loan out $900. So that's called fractional reserve banking. But what happened with SVB was that because they've collected so much deposits, they need to be able to earn interest off these deposits in order to pay the interest to their depositors. And SVB, compared to the big banks, in order to attract more people to deposit money with them, they have to give a higher interest rate to the depositors. And thus, they went into treasuries bonds. And over the last 2 years, basically, with the increase in interest rates, their treasury bonds decreased in value. And the whole bank run situation actually happened only through 1.5 days, because what happened was that there was news in the market that their treasury bonds were losing money. So they went out to the market to call for capital injection to raise $2 billion in order to cover the losses in their treasury bonds. And that news leaked to the market. So a lot of VC firms immediately overnight caught their startup to immediately withdraw all their money from the bank. And just in one day, $42 billion were withdrew from the bank. And that technically became a bank run situation. And the government had to step in. And of course, through this stepping in, there was two learning points here. Because by right, the FDIC, which is the government in US that is covering the insurance for the depositors. They only cover up to $250,000, but in order to prevent escalating bank run to other banks, they want to make whole for the entire sum. So the US government step in to say that they will cover the entire sum that the depositors have in the banking situation. Yeah. That, of course, to us is that the next question is that we want to understand, is this a stealth QE? Because is this like a stealth situation or quantitative easing? Because if you were to look at the balance sheet right here of the Federal Reserve, just have a look at this spike here. This is United States Central Bank balance sheet. And if you notice this spike, this technically sort of wiped off the entire, not say entire, probably about 60% of the QE that happened since April 2022. QT since April 2022. And why was this spike happening in the background? And this is something that we want to explore. So what do you think, Rong? Passing to you on SVB situation.
Okay, so generally, because of the banking crisis, we injected we injected about $390 billion of fund. So I think just look at some numbers. Quantitative tightening that time, over about 1 year, we tried to reduce the Fed tried to reduce their balance sheet by over 600 billion. And sort of like we reversed this almost in like a 2 to 3 week kind of time period because of this banking crisis. Just to add on to what you mentioned just now,
right?
Naturally, all banks, no matter how strong they are, will fail if, let's say, there is a bank run, meaning that depositors generally lose confidence in the banking system. They are afraid, they want to draw out their funds, right? Yep. And what happens is, we talk about the FDIC portion also, is because why these companies, because they definitely has more deposits, more than $250,000. And hence, insurance only cover until $250K. Of course, they are concerned over that additional millions and billions of dollars that they might have, and they say they want to ensure the liquidity, right? So what happens is, what's your question?
This is the second time you had the COVID-19 brain fog. Have you had COVID before?
Yes.
How many rounds?
1 round.
Okay. I'll introduce you some supplements. Okay. Definitely omega-3. That's the first prescription. George, send it to him.
Yeah, California Gold.
Andrew Huberman series. Okay. My question was that, do you think this is a stealth quantitative easing?
It is like, okay, they don't call it quantitative easing, right? I mean, like, this is another way to like inject funds. And of course, like this injection, they give the different banks up to 1 year to actually repay whatever funds. It's more like a cash flow introduction kind of situation. Right. Just like I was mentioning about FDIC, is because why, like, they mentioned is that like, hey, don't have to be worried so that they can stop additional withdrawals, like from the SVB. Right. So generally, I think like it is just like another form of quantitative easing. So when you introduce additional money supply, because this money will have to flow somewhere, right? So if it flows out to the depositors, and then this can be injected to other asset markets as well, right? And of course, this will be counterintuitive to the dramatic interest rate, 9 rounds of interest rate increase that we're trying to do over the last years to try to curb inflation. Right? Because additional money supply is now coming back in.
Right. In fact, we've just written an article that on propertybrothers.com. Basically, if you head on to our insights, we talk about this. Just key in SVB, Singapore property. Right. So we've written this article on SVB Bank run. And will this potentially attract investors to Singapore as a safe haven status? Because it seems like from the growing up years until today, right? All our parents, the very first thing, what was the first bank account that you opened?
POSB.
Yes, I mean, that's our favorite bank, right?
Why?
POSB is like a indoctrination. And of course, Singapore banks are safe, regulated by MAS. But I think in US, basically, there's this like worldwide thingy that your money is safe in the bank. So now with the bank run that has happened in March, 3 banks have hit this banking crisis. I think the mindset is that our money still safe in the bank if you are a US citizen, right? And then will this actually calibrate into a kind of situation where you will start to look elsewhere in other portions of the world for safe haven to put your money in maybe certain harder assets that has a better kind of stability? What do you think, Marc?
Yeah, so I think what we can share is actually on the ground. What has happened is that I've met a few of our clients who have inquired from US actually.
Right.
Yeah. So I think in particular to that, one of them felt that, I mean, they shared about this whole situation that's ongoing right there and their sentiments as well. Right. I mean, I won't go in depth today, but I think what they felt that is that they want to bring their funds into Singapore, and like one of them. It so happened that also I think US has that free trade agreement, so they don't have to. I mean, for US citizens, if they buy a property in Singapore, they don't have to pay ABSD. So that's one, I think, great thing going for the American citizens, so they can actually purchase a property here, right? And they're looking to park the funds into a hard asset here, meaning real estate, for example, amongst other things lah. Yeah, so I think we have seen quite a few of this just in the last 1 or 2 months. We have a few of these inquiries who came in already.
Right.
Yeah.
In fact, I think the chart, based on what Marc has mentioned, last year, I think transactions for foreigners buying residential property in Singapore, 14% were made up with US citizens. Yeah, so 5 countries here. What Marc has just mentioned about the free trade agreement, Iceland. How do you pronounce the second one?
Liechtenstein.
Norway, Switzerland, United States of America, and of course, when we look at the word Switzerland, we need to talk about Credit Suisse. So what happened with Credit Suisse, Rong? This is like a test.
So I never read too much into Credit Suisse, but overview from what I know is actually there were a lot of revolving management. There were all these like built-in issues that was way before. You know, like there was already brewing a lot of scandals and all that. Price has already been dropping. And of course, you know, like I think recent statement that they released, and then hence, you know, like the pricing start to drop again for the share pricing. And UBS actually have a deal to actually acquire Credit Suisse.
Yes, right. How about George?
I think the biggest kind of loss in confidence is when the Saudi Arabia bank refused, or rather they pulled out from the investment or injection of funds. So when that happened, by the way, Credit Suisse is the second largest bank in Switzerland. AUM of about $1.75 trillion. So I think it's too big to fail. So I think that's why the government stepped in and they call this a merger instead of a bailout. Yeah.
Great. Okay, actually, just now, George, you mentioned about the Saudi, right? Portion about the fact that they don't want to pump any more money into Credit Suisse.
Yep.
For that portion, I look actually deeper into that. That was actually a clip that social media has cut out on the whole conversation. Because technically speaking, if you look at the whole clip and the whole context, is that it's not saying that they want to pull their funds out of Credit Suisse. It's saying that they cannot be overly invested from a national standpoint in Credit Suisse. And over social media, people just cut out the entire clip. And that actually, just that clip alone,
right?
It caused the share price of Credit Suisse to drop overnight. So I think sometimes when it comes to social media, when we look at shorts, small little clips is actually very dangerous if you don't look at whole context, especially like, you know, we're doing a podcast now.
You must be careful what you say.
Yeah, if people just cut out one shot without looking at the entire context, then they keep banging on that particular statement, right?
Nowadays, they say the bank crises are all accelerated by the newest generation, which is the Twitter generation, which is what is happening and very different from 2008 during the Lehman Brothers series.
Right. So leveraging on that portion, since we're in the topic of social media, have you all seen the latest 5 hours, 43 minutes of grilling session from US Congress on TikTok CEO? Have you seen that?
No time to watch.
I happen to have a quick glance at it while I was in the...
Have you seen some of the summary?
Yeah, I watched the quick one.
Right.
About him. I think
who has watched it? Who has watched it? Anybody watch it? Anybody watch the US Congress grilling TikTok CEO?
He said that he's a Singaporean.
Of course, he is a Singaporean. Of course. Okay, so I didn't watch the entire thing, but if you were to watch some of the very key things, let me just show you one couple of videos here. Okay. Just have a look at this video. With the sound. Or do we have sound? Sound, or I play from my laptop. Alright, great.
Mr. Chu, your algorithms have prioritized providing harmful content directly to children, like self-harm challenges and even suicide. Just 3 days ago, Italy opened an investigation into the TikTok over user safety concerns after the so-called French scar challenge went viral on your platform. I know you know about the blackout challenge.
You know this blackout challenge?
Encourages children.
You all know what is this blackout challenge?
No.
This blackout challenge was the series of challenges that caused a lot of injuries and I think even some deaths with the youth is that they will trick one friend to be stand in the middle, then all three of them will jump, and then they will fake jump, let your friend in the middle jump up, then the two friends at the side will kick their leg.
Oh.
And you will fall backward and hit your head. Yeah, so that was a very dangerous thing. Okay, have a look at this.
Challenge, which others may know as the choking challenge, that encourages children to bring them to the point of unconsciousness or in some cases, tragically, death.
So, of course, he played that particular video. How many of you actually here watches TikTok? Do you watch TikTok? Do you? You watch TikTok, Marc?
When I'm in the bathroom lah. Well, some free time.
Okay, no. Anyway, this entire video, 5 hours old. You just need to type U.S. Congress, TikTok. The entire 5-hour session is online. There's some very fascinating things here. Some very fascinating things
Happening.
One of the questions that they posed to the CEO was that he questioned whether does the TikTok app uses the camera in our front of the smartphone to monitor the dilation of your pupil.
Oh.
So that was the question. Of course, this is a Congress hearing, meaning that they're challenging, right? It doesn't mean that they have proof or anything. But when you hear the entire thing, it's fascinating at the amount of detail they actually went into. So one of the things was that, does it monitor the pupil dilation of your eyeball to see that whether are you fascinated by that or not, right? What do you think of this, George?
I don't know whether is it really a case of just TikTok or is it a case of, some speculation is because Meta versus TikTok. I would argue that likewise, if you are on other social media platform, they might be able to extract data of sorts like this.
Right.
And I don't think it's just pertaining to TikTok.
Right.
My opinion is there could be other issues or other reasons.
Yeah. So this is a situation whereby I think US is pushing for TikTok to be banned.
Yep.
In fact, if you listen to this entire hearing, they're also pushing to see if TikTok can be divested from the main parent company. The part is that we're all on social media, right? I mean, even right now, whoever is watching this, we're on social media. Talking about how social media is moving, of course, TikTok has gained a lot of popularity over the years. And this is related a little bit because why? How many countries have banned TikTok? Do you all know?
No, I don't. How many?
And actually, I think something that's very fascinating is that I realized over the years, a lot of things that's happening around us, whether is it properly related or not properly related, eventually it will be related. Eventually it will be related. Why? Imagine if TikTok is banned in Singapore. Do you create content on TikTok or not? Should you invest your time to create content on TikTok now? Correct or not? Right? I mean, we have accounts on TikTok. We create content. We create, of course, good content for our clients on TikTok about real estate market and stuff like that. How many countries have banned TikTok?
If TikTok is being banned in US, they will not be able to see our content. And they have free trade agreement. And they want to bring the funds into Singapore.
Will Singapore be in a tough situation? Why? Because we are a country that, of course, is a safe haven, but we want to maintain good international relationship with US and with China as well, right?
Yep.
So, 3 countries have banned TikTok, and several countries have banned their government work phone to disallow installation of TikTok, like Canada and of course some other countries, right? So, in fact, I think there's a little bit of pressure. If you look at this, this was the latest news. Look at this. A little bit of pressure already because this is on 17 March.
Need 2 bases.
Yeah. Wow. So I would actually suggest, do you all subscribe to Straits Time and Business Time? You should read a little bit widely.
You subscribe to PLB announcement.
You have the PLB News Alert chat group. That's my
From
Straits Times
Nicole.
and Business Times.
Maybe Nicole just send us the username.
Okay, I mean, this is a very interesting development, and I think all of us should look at it because it also concerns whether should we, and of course the rise of Twitter right now. And in fact, if you have been to Twitter, is doing extremely well after it's being sold to Elon Musk in terms of the features. I'm quite fascinated by the features. Okay, just to prick your brain a little bit. Okay.
Awesome.
Okay, Rong, tell us, would you allow your kids to use TikTok in future?
I don't have kids yet. So
I think I'm the only other one that can answer this.
yeah, Marc.
Okay, I'll take this one.
Yeah.
Yeah.
Maybe the wife will ban you from using
TikTok.
Why are you using TikTok, Marc?
Huh? To learn stuff lah.
Sure. What do you watch most of the
What I
time?
watch. There are real estate videos because I think we mainly watch real estate videos, and then there are some like I don't remember whether it's Reels or TikTok, but it's like baby stuff also. Like how to handle a 2-year-old.
You use it for educational
Yeah,
purposes,
it's
right?
like an educational purpose thing.
Great.
Yeah, of course, there are some fun content lah that we watch also. I can't remember exactly what. Yeah.
Do you watch TikTok? Do you use social media?
I don't even have TikTok. As in, I don't have the app on my phone. Sure. And actually, a lot of people will know that actually I'm not a very social media person. I don't really post much on social media.
How do you spend your free time?
There's no free time.
George, do you use TikTok?
I use IG. I create reels.
Yeah, George has a few reels that went viral. Please support him. Support his reels.
Yeah.
Okay. So coming back to this question, will you allow your kids in future to use? At what age will you allow them to use social media?
Maybe 25.
Oh my goodness, there'll be a dinosaur.
Maybe it's not over TikTok.
I think maybe in their secondary school years. Yeah,
Like Sec 1 at least.
maybe.
My son, one of his friends came over to stay during the holidays. And then, of course, during dinner, I asked them, how long do you spend your time on social media? Then he showed me his screen time. Fascinating 5 hours averagely on TikTok.
Wow.
My advice to him is that, young man, do not burn your life away. Spend your time to read books or stuff like that. Because I think it's just burning time away. And that's the exact word that my son's friend told me. He said that sometimes once he start to get into it, he just find that he cannot stop. And I've talked about this a lot of times during our harder as well. This is a little bit like a dopamine release. It will trap you inside because the amount of content is so fast. You just want to swipe and you will just unknowingly swipe that. So I think anything that is used to extent that is overbought, it can become, of course, a situation whereby you find it very hard to be weaned off.
Yep.
Yeah. So back to this topic, because why is it related to real estate, right? It's because you don't want to ask me, right? I personally think that the quantitative easing is a little bit like a dopamine release. Have y'all watched this? Go and watch this. Hey guys, come on, no kidding. Go and watch this. If you have not watched this, please. There's this...
After 15 minutes of foreshadowing, that's the conclusion.
Watch this. Too big to fail. One of the most interesting drama that was created on HBO. It talks about behind the scenes of what happened with the Lehman Brothers collapse.
Oh.
And
Too big to fail.
This is a physical set glitch.
That's okay. That's okay.
It's okay.
what are you trying to do, Kevin?
What was going on? The one time I was talking, the captain is slowly dropping.
So might as well let it
Okay
drop.
lah, just leave it. Okay, go and paste it.
5 minutes. Let me take the 5 minutes to fix it.
The curtain has collapsed just like how the bank collapsed.
Hey, pun intended.
Okay.
Can we have the nuggets? So we're just talking about the TikTok dopamine, right? Why people get stuck on TikTok? Because firstly, the content is so short. Secondly, it's actually created a new era of very reduced attention span. But of course, surprisingly, now TikTok is increasing their length of video because they're also trying to dominate not just short form but long form videos as well.
And then because actually when you're scrolling through TikTok, there's like a shock factor because you are not choosing what you are going to watch.
Yeah.
So like it's like a
Surprise factor, right?
like
Novelty.
a surprise. That's why you can like keep thinking, hey, what's next? Then you keep swiping.
Yeah. And actually, I think this has also contributed to a lot of people having spasms in their wrist. Because people like to lie on their bed and then just swipe. Correct or not? Do you have spasm, Kaiwan, on your hand watching TikTok? Oh, fantastic. Can you tell us a little bit about Bitcoin? By the way, Kaiwan is our Bitcoin specialist. What do you know about Bitcoin? Okay, quick explanation, because later the last part is that we're going to talk about Bitcoin. So this is Kaiwan. Come, share with us a little bit.
Bitcoin is good. Bitcoin is the future. Buy Bitcoin, yay.
In summary, explain the explain the Bitcoin technology, please. Okay, what is Bitcoin?
Bitcoin is a cryptocurrency. And yeah.
Wow.
We'll come to that later. By the way, today we have Deborah in the house. Say hi, Deborah. Share with us a little bit. What do you do, Deborah?
Eating porridge every day.
Deborah, come here. Well, welcome to the producers.
Yeah, welcome. Okay, please head over to the producers. Introduce yourself.
Hi, this is Deborah. We have Deborah on the scene.
My lunch halfway. Hello.
Yeah, what do you do previously and now in PLB?
Okay. Previously, I was doing business development in a startup. And I was also coaching in the fitness scene. But now at PLB, I'm in the inside sales team. Very proud to be part of PLB.
All right, let's welcome Deborah,
our porridge specialist.
Awesome. Okay, back to this dopamine. And so we talk about the banks, we talk about Fed, we talk about TikTok, talk about the fact that it's a dopamine rush, and then how does that relate to the monetary system? Let's have a look at these two charts. Now, this is what I feel is a dopamine rush, because every time we have quantitative easing, the amount of money supply increases, and we're talking about M2 money supply. So there's M0, M1, M2, M3. I shall not go into what that is, but of course it's different kind of money supply in terms of like whether is a liquidity held in deposits or injection by Fed central bank. So basically M2 is a measurement of the amount of money supply that's being injected by Federal Reserve. So when you look at this, some people will think that why does this relate to Singapore? Because it correlates directly. Just have a look. This is Singapore money supply. Why is there a correlation? We talked about this in our article, is that we are very interlinked to United States because though US is far away, but is our country's largest trading partner. It surpasses EU, Japan, China, ASEAN, and of course any shock that happens there, there's a knock-on effect in our export-driven economy. So when we come back to this money supply, this money supply relates to our money supply as well, because liquidity flows into our system very quickly. If you look at the latest news when SVB collapsed, and what has happened in our local news is that MAS, of course, is very mindful of the situation that's happening. And of course, they also said that they will provide liquidity to our banks if there's any shock. Now, when you see this kind of word, liquidity, technically it's talking about
printing money.
Yes, printing money. Although most of the money is in digital currency.
It's so awesome, right? So imagine, right? You can just key in, and then suddenly you can be a billionaire. 10000000000.
How is money created in our economy, guys? What do you think about it, Rong? How is money created?
How is money created?
Yeah, how is money created?
Money is created through faith.
What do you mean?
Through faith.
Okay,
What do you mean?
okay. Number one.
Okay, under the fractional banking reserve system, how is money created?
When people take a loan.
Fantastic. Where do you learn that? Bingo. Where do you learn that?
Nuggets on the go.
I think I was born with that knowledge.
Hey, stop it.
TikTok.
No, okay. So generally, because it's like so whenever there is a debt, right? There's a loan taken from a bank. Then basically the bank can actually print this amount of money to be injected into the system. Yeah.
Fantastic. Great. Okay, let's do how about Marc? How is money created?
Money created.
How is money being created in our system?
I mean, like the QE is one. I mean, the printing of money, the debt thing. I think also, in my opinion, I think also when assets technically grow, like, I mean, since we are property Lim brothers, of course, property grows, right? And then, right? Then basically, I mean, more money will go in the system. So imagine you buy a condo, right? 1 million. Then 5 years later, 1.5 million. Then there's basically it translates into money when you sell it, right?
Yeah. Appreciation, right? Asset inflation, right?
Yes.
Okay, great. Now, there's a couple of ways that on how money is being created, but primarily, in short, what Rong and Marc said, basically money is being created when money is being loaned out, when money is being lent. So let's have a very simple illustration, right? So assuming George now has $100. George, you loaned let's say you are a bank. Okay, no. Let's say you are a normal person. You're $100. Daniel, can you be a bank for us?
Sure.
Okay, so Daniel is the bank, right? So Daniel is Bank Daniel. So you go to Bank Daniel, you put your $100 in Daniel's bank. So Daniel, now you have $100 as deposit in your bank. But under the fractional reserve banking system, Daniel is allowed to loan out 90% of what he has just collected from George. Okay. So George will now go to Daniel. He will put $100 as a deposit, but he will loan $90 from Daniel in order to go and do his business. Now, how much money is there in the economy now?
$190.
$190, fantastic. Why was $90 being created? Because George now owe Daniel $90, but Daniel owe George $100. So there's $190 in the economy now. But initially there was only $100. So as this thing goes on, money is multiplied under the fractional reserve banking system. So what does this mean actually? Actually, all this sprouted out after US became the dominant global currency. Last time, actually, every bank needs to have a backing with gold in your vault as a hedge, and of course as a backing system. That means you cannot just increase your money supply in this fashion. So when fractional reserve banking system was created, money supply actually escalated, and of course that boosts the economy because people need to loan money to expand their businesses, to buy properties and stuff. But what does this mean when we calculate between somebody that is saving money and somebody that is investing their money using good debt? What do you think, Rong?
I think like generally is all this created a lot of asset price increase. Okay, when you have additional liquidity, it will bump up asset prices, right? So asset prices essentially is also partially created inflation, right? In summary, let's say today, if I do not put my money or invest my money, right, I just put $100 now, maybe $100 now, today, let's say one packet of chicken rice is $4, right? I can buy 25 packs, correct? But if I keep this $100, 10 years later, it's the same $100, but right now the chicken rice is only, is say like $10, for example, right? But now I can only buy 10 packets of chicken rice. So that is actually what, to me, is a very simple way to understand how inflation erodes our purchasing power. Even though I have the same amount of money, the same bill, but I can acquire lesser number of goods.
Fantastic. I realize you love to use chicken rice a lot.
Yeah.
This is the third time you use chicken rice as an analogy.
Because it's one of the most common food in Singapore. People can relate.
Katong chicken rice is quite nice.
Actually, it's not my favorite food. Okay, but anyway,
Yeah.
Yeah. Marc, what do you think about this?
I mean, in Singapore, I would think a good analogy that I always tell myself or I share is that if you buy a car, take a loan, right? But the car is a depreciating asset. That means your technically when you loan, it's not put into an asset that either helps to minimally retain the value or grow. Right, so at the end of the day, maybe like in Singapore, of course, 10 years later, your car has to be scrapped, right? So let's say you buy a car 100,000 every year, it depreciates, let's say 10k, right? And then it's gone, right? Comparing that to a good debt, meaning you take a debt and you invest in something that appreciates over time, then I think that not only helps you to grow your wealth, but at the same time, comparing that to like putting in the bank, right? Where technically your money is getting smaller by the day. If you put in an asset that grows, technically it not only preserves your wealth, it also protects your value over time. Yeah, so I think good debt has to be something in summary, basically that helps you to at least minimally retain the value of what it can. That means in Yurong's case, right, if today I use that $100, I can buy 25 packets of chicken rice. This asset, if I put it into something, right, minimally it has to still be able to buy me 25 chicken rice 10 years later, for example.
This is only trying to maintain your
only.
purchasing power.
Correct.
So even though like your wealth increase, but actually the amount of goods that you can buy is the same. So technically speaking, from a nominal rate, right? Actually, there's no increase. So that's I think the basis is called like we just want to protect the purchasing power first. And of course, if we can invest at a higher rate, then we will actually have increase in wealth. But coming back to just how you mentioned about like car loans and property loans, right? I think like how I would differentiate bad debt and good debt, right? It really depends on whether whatever the debt that you take on, right? Let's say today I go into a car, right? Most of the time it can be classified as maybe like a bad debt, right? But it can also be a good debt. If let's say, for example, I loan for this car, and this car, I actually convert it into like a business, like a rental business, right? Where the amount of money that the revenue I generated from leasing this car out versus the loan that I need to pay, and now it can also become a good debt.
Yeah, it's true.
Actually, I think if you're in Malaysia or other countries, your car is freehold. It's fantastic. Car rental business.
Yeah, that one is only for Singapore context. I mean, I don't know any other countries that have a COE, but yeah. Yeah.
Great. How about Josh? What do you think? Have you changed your car, by the way?
The dark Black Beauty.
Why have you not?
Insert a picture of Georgie's car here.
Because he believed in changing property first.
He did already.
You really did.
Yeah. He want to buy another property. He want to buy 10 more before he changes his car.
You'll pay ABSD?
No.
Or he'll buy under...
But your car is a bone shaker, according to a lot of our IST who have set your car. And it's a sports car, but it's a bone shaker.
What's a bone shaker?
That's great.
It means like, you see already, you felt that your bone has been shook.
No.
Weak
It's because
bones.
they are not. They are facing osteoporosis.
The way that you drive your Vios is, they say you're driving an F1 vehicle.
Yes.
Oops.
And things break.
Sorry. It means that there's not enough nuggets. Okay, yes. That's how a bone shaker feels like. Thanks.
It's like the most mishaps on.
Okay, share with us your concept about good debt. Thanks, Kevin.
I think if I generally believe that if let's say today you have $1 million, you shouldn't pay off your property because you are able to leverage like 4x. In today's context, you can leverage 4x. So you just use the 250,000, the remaining 750,000. So when you buy a property, it's already a good debt. Of course, you have to rely on
If you buy
PLB's
the correct
moat
property,
analysis to choose the right property. And then after the remaining $750,000, you can use it for other purposes. It's just like what they mentioned. I think it depends on the mode of investment tool or investment vehicle that you actually are buying into. If you want to buy into a car and then you want to lease it out, that can also be a good debt as long as it generates good cash flow or as long as it covers the interest, because covering the interest at least protect your baseline. Otherwise, you can go and buy into other investment. Depending on what kind of investment, if you're like Kaiwen, you're just all in into Bitcoin, right? Then that can also be turning out into something that is, generating higher cash flow. But at the end of the day, I think what we all want is to protect our baseline and to beat inflation.
Great, fantastic. I think we need to put a quick disclaimer here is that whatever we are sharing here is not financial advice. So please do make sure that you do your own homework. Okay, great. We want to talk about these two graphs. So we shared this during one of our latest webinar talking about landed properties of whether should you rebuild A&A or buy brand new landed homes. And these are two very common graphs that if you have taken econs module in the past, you realize that last time what you have learned actually seems to be applicable to a lot of things right now. Landed property in Singapore has a very inelastic supply relationship to price. And this is what we call elastic supply relationship to price. Now, what do we mean by that? Very current example is that if you look at HDB apartments, whenever price rise, take a look at what happened to the supply. Immediately, our government respond with 150 BTO projects to be built.
Yep.
This is an elastic supply. So HDB apartment in Singapore has the elastic supply relationship of price and quantity, meaning that when price rise, quantity increase to fill up the demand. Yeah. For landed homes is this situation. It has an inelastic supply relationship. When price rise, the quantity cannot be increased because why? This is the situation that it has been going on for the past 10 to 20 years. Our supply situation is stuck. There's no more technically no more GLS for landed homes, and it is also not feasible for government to release land to build landed homes because you can build high-rise condominiums or high-rise HDB to fulfill the demand in Singapore. Why should you build landed homes? And of course, there's an ever-growing demand for landed properties because of its space, freehold status, and it's an aspiration for a lot of Singaporeans. So it has an inelastic relationship. And thus, landed homes, of course, it has the most restricted supply in Singapore. So when price goes up, it remains largely the same. So you're putting your capital technically, and this is why am I sharing with you this is because back to the topic about good debt and bad debt is that this also has a combining effect of putting your capital in an asset that is harder. And we want to explore this topic about hard and soft money, hard and soft asset. Hard and soft money relates to Bitcoin. Hard and soft asset relates to the type of asset. And let's say for our context, if we discuss about property, there are certain properties that are softer. There are certain properties that are harder. Rong, what is the example of? I mean, landed home is a hard asset in my context because why? It has an inelastic relationship of supply to price. What do you think are some examples of soft assets if we exclude HDB? Certain types of properties.
Okay, so if you are saying like high growth, right, basically it's property types that can attract more appreciation, right? Generally, if it's there's more scarcity. So for example, you talk about like the inelastic supply of landed properties, right? It's because there is very little additional increase of supply, right? Hence, like price can be driven up. So we call that high growth. Yeah, but of course, landed, I would say that they are also have like features like low rental yield. So generally, you must have the holding power. You know that there is growth, but you know that your monthly cash flow is definitely negative. Right. And of course, I think we always mention about smaller properties being better in terms of easier to rent out, higher rental yield, for example, like a 1-bedder, 2-bedder. But usually these are like lower growth. Because, number one, there is a lot of supply, there's a lot of choices for the exiting pool of the market. And most of the time, all these exit audience, they were looking at like 1-bedder or like a smaller 2-bedroom, right? I always say that, I think like the profile, there's a lot of investors that are looking for this kind of properties. And when you know that you have like a big audience pool and they are from investors, right? It's not like
something is wrong.
It's not the best. It's not the best kind of people that, not kind of best audience they want to sell to, because investors look at numbers, right? They don't have like a location preference. As long as the numbers is right, they are ready to go ahead. So I would like something that like to own something that is more high growth, coming from the angle that supply is more limited, right? And my end user, they want to use it. They have certain requirements, and I can connect to their emotions, and that's how I can achieve like a better price growth down the road.
Right. Fantastic. So as we discussed, I'm going to key in what kind of properties do you think falls into which quadrant. So we introduced this Q1 to Q4. It's a new framework that we have just developed in order to help our audience to understand a little bit about which kind of property assets are softer, which kind are harder. And of course, there's no right or wrong, because in every season of your property investment journey, sometimes you have to go for lower growth products first because maybe your investment quantum is lower. And then of course, as your valuation increases through time and you start to see appreciation, you might want to divest and switch to other harder property assets. So of course, we classify landed homes under high growth, low rental yield. The key rationale is because, for example, if you buy a $6 million semi-D in the OCR area, let's say D90 or D28, but your rental, in terms of the gross rental yield over the next 12 months divided by your entry price, is going to enjoy a lower rental yield compared to, let's say, a condominium, which is at a lower entry quantum of about $2 million, but maybe the rental, after you gross it out, it enjoys a higher rental yield. So that's what we mean by high growth, low rental yield. But in terms of capital appreciation, is definitely faster and stronger. So Rong just now mentioned that smaller condos is under low growth, high rental yield. A quick illustration, maybe Rong, just give out an illustration of like quantum relating to maybe like a 1-2-bedder in terms of quantum and rental. How do we calculate a gross rental yield?
Okay, so gross rental yield generally is we take the monthly income multiplied by 12 divided by my purchase price, right? So then that will give me the rental yield. Generally, I would say that like today, considering like residential market, right? I would say that something like 4% to 4.2%, that's considered like our higher rental yield kind of benchmark.
Right. Great. Marc, where do you categorize, let's say, HDB properties? Which quadrant will you put them?
HDB properties, high rental yield, but probably low growth.
Fantastic.
2-3.
Same thoughts. In fact, I think HDB properties has the highest rental yield. Right? Because the quantum is the lowest, but the rental is like fantastic.
Because the pricing is indirectly controlled through regulations and supply, because it has to be an affordable segment.
Yep.
We have like minimum occupancy period to determine when you can exit. We have like family nucleus to decide who can buy as well. So it is, but I think it fulfills a very, very important social segment in the real estate space in Singapore, because it's to make home ownership affordable, and like everybody or like most people can have a home to start with as a foundation.
Right. Fantastic. George, where will you put a 3-beta condo in the OCR region that is below $1.5 million? Resale.
I'll put that as a Q2 because
Why?
I think if you're talking about 3-beta, anything that's 3-beta and above, I think that will have quite a big crowd of audiences that want to buy into. And when you have a strong demand, I think the growth will also be there. Rental yield, I think it will also be very, very healthy, because a lot of families, they want a 3-beta, they want the facilities for the kids to enjoy, also proximity to school. So at 1.5, I think it's quite hard for us to find nowadays already.
Right. So you think in this season, this falls under high growth, high rental yield?
Yeah, but if you have a 4-beta, I think that would be perfect lah.
As in like the high growth will not be on par with like a landed property. But it's still considerably, like under like the higher growth kind of rate. Like maybe basically your 3, 4, 5-beta apartments at the correct entry price at the correct region. So this will be under high growth, high rental yield. Unless you're in the core central region, then maybe the yield we will not classify as like a high rental yield.
Okay, great. So maybe everybody share. What kind of property types would you put into Q4? Commercial properties. What kind? What price range? What type?
I would say 2 million range. Typically, I think their rental yield is not, say, very high. And because commercial property also have a slightly higher interest rates. And I think the audiences for to buy into commercial space is not as much as the residential segment. So I would say, that will be the kind of segment that I will be putting into.
Maybe I think like specifically I would say like in the retail segment, in the strata retail segment, where generally the yield is not strong. PSF is high, and of course I think generally it's not easy to find a good retail space unless like it's F&B kind of related. Because all the major brands will be in shopping malls, so there's no participation level and from an investment angle. And of course, if you're only left with like the strata space, unless you're doing like services or like F&B, these are potentially one that you can actually get like a better yield. If you're trying to sell something physical, people go to shopping mall or they go to like online platforms, Lazada, Shopee, right? They can get essentially the same thing. Maybe shop house can be also under Q1, high growth, low rental yield.
Right.
Shop houses. Industrial properties generally I will put under Q3. They can have decent high rent, especially those with shorter lease terms.
Right. What do you think about you brought a very interesting thing about this strata retails. Maybe share about this. What are some examples of? I mean, there was a season and era that a lot of all this strata and their freehold retail properties were created after the 2013. So ABSD came in hard, TDSR came in hard. So a lot of people actually flouted into commercial strata freehold shops. And the key distinction is that when we talk about the human traffic tend to go to malls that have a herd mentality and when there are popular big brands. So when you look at how CapitaLand, when you look at how the big boys, when they structure their malls, they don't sell their strata space, they rent them out. but there's a strong team that brings in the big boys first. They bring in McDonald's, they bring in
Anchor tenants,
NTUC, Cold Storage, GV, and of course, when all the big boys are there, the herd mentality by other tenants flows in, and they control what brands they bring in.
Correct.
So as a tenant, if you were running a business, you had to pitch to the management why you deserve to be in the mall, right? And of course, now the rental model is that on top of the monthly rental, you still have to share your gross
revenue.
Yeah, it's called the GTO, right? You have to share your monthly revenue. And what Rong was referring to was the era from 2013 until about, when did it stop? About 2020.
Actually 2013, I think all the while until like 2017, 2018. Okay, generally essentially people always will have money, right?
Yep.
And the money has to flow somewhere because everybody is trying to chase returns to beat inflation. And of course, 2013, when Singaporeans are in the residential market, where you have to pay additional buyer's stamp duty for your second property onwards, and the money has to flow somewhere because they don't want to pay this tax. And naturally, which kind of property segment doesn't have ABSD? So there actually funds flow to two main sectors. Number one, commercial industrial properties, which are your offices, your shop houses, your retail space, strata retail. And there are also a lot of participation on like foreign properties. And actually
Overseas.
Yeah. So like based on stories,
That
and
time
of
was
course
like
based
Iskandar,
on like
right?
numbers,
Right.
actually most of the people lose money when trying to venture overseas. I think overseas is something that you have to be very, very careful in the sense that I always share with my clients that it's very hard for Singaporeans to invest overseas because our currency is so strong. Right? So number one, if you invest overseas, number one, you need to know whether it's a scam or not. Because it might just be a Photoshop title deed. There might not be even this development. Money goes over there. And then you get payments because they give you like rental cashback and all that.
Yeah.
And eventually it stops. Eventually it's like a Ponzi scheme. Right?
Yeah.
So one. Second thing is you could be buying into something overseas, but it's very hard to exit. Very hard to rent out. So the money is stuck there.
Yeah.
Right? And then thirdly, it could be that assuming that there is some growth. However, if you were to compare, maybe the property price grow, but the currency that invested in actually depreciated against SGD. And then based on all these risks and the trouble that you'll go through and the stress level, you find that, actually, maybe it's easier just for me to fully optimize my Singapore holdings first. Of course, once you have fulfilled that, then you can think about other sectors. Yeah, and if you're more adventurous, because I would say that Singapore, because it is so sheltered, right, all the rulings and regulations, the master plan, is so transparent, transaction data, right? If you have the right advice, it's not easy to go wrong.
Yeah. And
lesser pitfalls.
we always share with our clients that we should be the ones that is buying up our properties first, because there's a reason why foreign investors love Singapore properties. And you should always look at the home ground first. What you mentioned was very true, because if you look at the overseas investment kind of spectrum and you just try to weigh out the pros and cons, firstly, of course, there's a lot of opportunity cost. Traveling there, of course, you can find a good local partner to manage your property for you, but currency is a huge risk. Secondly, is that if you don't understand the laws and the governance rule there, and you don't understand whether developers have a stringent set of guidelines by government that they have to complete the project within a specific number of years, you might be buying into a property that take years, and maybe it might drag on like 10, 15 years to complete. Secondly was that during that era, there was some stories about investors buying overseas property with a promised rental yield. This was very common back then. In the last 10 years, you buy into a property, the developer guarantee you, let's say 8%, right? And to their horrific amazement was that so the rental is like guaranteed for 2 years, and then maybe you're sitting in Singapore, you started to collect rental, then of course you pay off your installment and stuff. But to their horrific amazement was that after 2 years, you went to take back your key, the apartment is actually empty. There were no tenants there. So the developers basically technically mark up the price and then use that amount to pass you back over the next 24 months as rental. So you thought that there was a tenant demand, but there was no tenant demand. And then what are you going to do with the apartment for the next how many years, right? So this
Holiday home.
Yeah, holiday home. Great. And okay, we need to come back to the Strata retail space. Marc, maybe share with us a little bit about some examples of all these strata retail malls and their key differences from managed malls that are being rented. So maybe I start off with the old eras first.
Sure.
Old eras, Queensway Shopping Mall. Anybody don't know Queensway Shopping Mall? Where
Go
you
there and buy
sports shoes?
my sports shoes.
That's our favorite hangout place, right?
Yes.
Katong Laksa plus the basketball and the badminton rackets and stuff like that. Okay.
Also dying already.
Yeah, but it was miraculously branded as a sports mall over so many years. Number 2, Sim Lim Square. Miraculously branded as a PC mall, but they're all strata owned. Alright.
I think like number one is in all these strata malls, right? Because there is no like a managed mall where there is a committee to determine who is the anchor tenant, what is the right tenant mix, right, that will give the best value to shoppers that is coming to this place, right? So like individual owners will care for their own individual interests to try to rent out to get the highest return or like the fastest to rent out so that they don't suffer vacancy and just pay monthly installment. So what happens is sometimes, most of the times, it doesn't work out. Most of the time I see a lot of like mixed development after 2013, right? So when they TOP, they might have 100 shops. Yeah. Right? And when you buy into a mixed development, you pay a premium, even for the residential portion because of the convenience to all these shops, right? But usually when it TOPs, you realize that usually 1 year later, right, most of the shops are still
empty.
Vacant.
Yeah.
Yeah, it's still vacant. So you pay a premium, but you don't really get that kind of additional convenience because there's nobody to manage. There is no all these brands, all these like shopping malls, right? Like their experience, right? They will actually reach out to all these vendors way before the TOP to actually lock in their contract to like start everything out.
Right.
And I've seen like mixed developer who has like 5 to 6 mid agency. Like why do I need 5 to 6? Imagine you're like a mixed developer, you come down, okay, every day you want to hire a mid, so you go to different mid the mid agency. Doesn't make sense, right? But of course there was some time.
This one I got something to add later. Okay, come. Okay.
But there were times that like all these strata malls, right, happen to create an identity. So just like I mentioned, like Queensway Shopping Centre, Sim Lim Square, right? Because there is an identity, these are the places that actually do well because they can actually attract a form of crowd to go there.
Right.
And actually in the 2013 era, actually Sim Lim Square, the pricing actually went up a lot because a lot of speculation. For people who want to be out of the to not have to pay ABSD, they are looking for products that don't have to pay ABSD. Right. And then we can talk about Bugis Junction also. Because for example, Bugis Junction, we are interconnected to MRT station, so it's a managed mall. So it's doing very well.
Right.
Then after that, opposite, there was another managed mall. What is it called first initially?
Bugis
Illuma, right? Then it wasn't doing so well, right?
Yes.
Then after that, it was rebranded to Bugis Plus.
Yes.
Add on an additional link bridge.
Yes.
So it became, it does much better. Because why? Because people are lazy lah. Singaporeans are lazy, right? So actually in terms of malls, right, actually footprint, how people walk, how long they need to walk is very, very important. Right? So people don't want to cross the road under a hot sun to go to Illuma. But once you introduce the bridge and it's air conditioned, you can actually filter some of the traffic over.
Yep.
And then the other one, if you see, the other end of Bugis Junction where Bugis Cube was introduced, that was a strata space kind
Bugis
of
Cube is a strata retail that allow individual buyers to buy.
Yeah, individual buyers to buy.
Okay, but maybe for the sake of our audience, Bugis Plus is now being managed by CapitaLand already.
Yeah. It's because it's the same company, that's why they can actually do the link bridge lah.
Correct.
Right, so Bugis Cube, even though it's at the same, you can see it's actually at the same location, just one road. But the traffic flow is not there.
Yeah. Correct.
Actually, I realized that all the older malls, right, even though they are strata, but they do pretty well. Even for Beauty World.
Yeah.
Beauty World, because it's beautiful.
Okay, just back to what Rong mentioned, like, is there a need for 5 employment agencies to be located? This is basically what we call the hoteling location model in business sense, because sometimes when similar businesses, although they are competitors, they like to group together to leverage on one another. Yeah, so it becomes like when somebody wants to shop for this particular product, they will just go and shop these 5 competitors and somebody will get hit in a sense. Yeah. So it's called a hoteling location model.
This is makes sense for the business.
Like Queensway, Sim Lim.
Yeah, for the business. But what I'm saying is that like maybe it don't bring the convenience that the residents envision when they buy into the mixed development. Because I'm not going to shop for a mid every single day, right?
In fact, now Bugis Cube It's becoming like a place that you do your hair and manicure and stuff already, right? There's a lot of same businesses clustered together. Now, Marc, how about share with our audience what are some examples of other malls that are under the Strata retail space?
So I actually wanted to add on to this point. If you notice the malls that you all talk about, right? The ones that did well, like Sinim Square, like Beauty World, like what's the other one you mentioned?
Queensway.
Queensway, right? You notice they're actually all aging already.
Yeah.
Yeah.
Right.
So I mean, just a thought lah. It also could be that because it has sort of I mean, it could also be the onset of Lazada and all these kind of online platforms. Plus, I think with that, because they are Strata managed, right? Generally, they are not being refreshed. Like they don't have that like a lot of the like Plaza Singapura, it was totally redone. I don't know how many millions went into it lah. So it was always refreshed.
Like Funan also.
Like Funan IT Mall and so on and so forth, right? So that could also be, I mean, just a thought. It could be also that because it's getting old, could it be this is also causing a little bit of like the consumers these days feel that hey, it's getting old. I don't really want to go there and this kind of thing. And with plus the onset of the online e-commerce platforms, then it's also lowering the sort of the footfall of traffic going to these kind of malls. I mean, just a thought lah, right? Then coming back to your question, Melvin. So I think some of the malls that maybe on the start, even though it was new, so just now we talked about malls getting old, but some that were new, Strata malls makes developments, but also maybe didn't do very well. Like I don't know if you all know Midtown Residences at Hougang, right? So on top there's it's a condo lah basically, and then at the bottom there's 2 levels of shops.
Correct.
So I think in the early days, if you walk there, if you live in the Northeast Line or the Hougang area, that mall was quite a ghost town for quite a while. Like if you walk past, right, you will see a lot of the agents for rent signs, right? Until a certain time, I also don't know why, maybe 1 year, 1.5 years later, when some of these units started being rented out to a certain type of tenant. If you go there now, if you go second floor, right, you'll notice it's almost all enrichment centers, piano school.
It started to evolve already.
Yeah, natural kind of tenants moving, right? Yeah, it slowly evolved into like a mini enrichment hub.
It started to have a theme by itself.
Yeah,
right.
Yeah, but in like all the malls that are being managed, they are non-strata title. Usually, this is controlled by the mall's management. They will sort of depict that, okay, below B1, B2, I want to have F&B, how many bubble tea stores, how many, I don't know, Asian food, Western food or whatnot. Then how many, if I want a cinema, there's only usually one. Then maybe last time, then clothing stores, there's going to be a certain level and things like that. But in Strata malls, there's no such guideline. It's just like free for all one. Yeah, as long as it fits into the use of the retail shop, then they can go in. Yeah.
So I think like generally, if you are a business owner and you want to operate a business, you want longevity, you want like certainty, right? Then maybe owning a proper like Strata retail might make sense for your business. But I guess if you are a pure breed investor, you're just trying to maximize your returns, then maybe there are other safer and more secured options lah. Yeah.
Right.
Harder
Fantastic.
options.
Fantastic. George, you got anything to add on this Strata retail topic before we move to the final topic of
I think
today?
Another one that's very obvious one is Junction 9. So the other time when I stepped into Junction 9, it was quite appalling, I would say.
Appalling?
Because right, you have Sheng Siong supermarket right inside. That's where you can get everything. But then right at the atrium, there's one like Pasar Malam fruit store laying out all the like dragon fruits and papaya.
Well, are they doing well? That's the key question.
I don't know. When I step in, I wanted to just turn out because I think the mix of the tenants there, it doesn't feel very appealing, and it really feels like a Pasar Malam inside the air conditioned area.
It's a carnival.
Those that are staying in. So I think back to what Rong says, if let's say you're really an investor, you want to buy into something that's really give you that kind of cash flow, I think you have to think twice, especially when it comes into Strata retail malls.
Right. Great. Let's maybe before we head on to the last question, Daniel and Cephas, what do you think? Strata retail malls. What are some of these Strata retail malls that you have seen that are like a little bit like a ghost town?
I agree with George. Junction 9 is dead.
The residential properties upstairs are doing well lah. It's the mixed development downstairs. Yeah. How about Dan? Have you seen any Strata retail malls that are a little bit like ghost towns?
I think like the recent one is the newly opened Grand Trail Mall. I don't know if I can see it.
Just opposite our office.
That's right, obviously.
Oh, but Grand Trail Mall is not for sale, I think. It's for rental.
Right. Oh, then
Actually, one more, which is Space at Kovan.
Oh, yeah.
So Space at Kovan,
There's a nice wanton mee there.
yeah, so they have like wonton mee and all that.
Soy
But
19.
then what happens, right, is that it slowly starts to have all these like seedy massage parlors that are opening, and then the rest of the units that are inside, right, are totally empty. Totally empty. And you can see the raw cement are still there on the flooring.
Right.
So I think those are you're wrong.
I mean that is normal because unless your business need like your F&B, you want walk-in businesses, then like frontage is important to you. You want to be outward facing.
Correct.
But sometimes I see like okay, like people who like want to operate like as a tuition enrichment, they don't need people to really walk past and actually see their signage, right? So they can get business to social media.
When you talk about this, right, I remember one very, very stuck memory is Promenade at Pelicat.
Oh,
So they have a lot of retail outlets, and then a lot of units are empty. So what one of the tenant did was, right, he go to approach one of the owner. How much? Oh, $800.
I read.
Then he go and approach the other one. The other one offer me $800, but your unit is empty. Do you want to offer me at $700? And eventually he's able to get a very good price that doesn't require a lot of footfall to run his business.
What business was he doing?
Spectacle, optical.
Right.
So he sells spectacles, but
The rental is only like $700 a month.
I think it's even cheaper than that. Yeah, so he basically go around and ask, and then eventually one landlord, just let
the more primarily the internal facing one is still empty, right?
yeah, it's quite empty.
Yeah. That was the era lah. I think 2013 created but of course, I mean I don't see any new kind of are there any more of these big developments for sale now? No, right? I mean in recent launches.
No, nowadays is usually the
developers will keep
developer
it.
will manage it,
And they
which is
will-
great.
Yeah, I think it's better. It's not, it looks like it's really empty. Right. And last but not least, our final topic for today, we're going to talk about why was it that there was a correlation in the sense that when there was all the bank situations that happened in March, but why did the price of Bitcoin rise? But of course, before we hit the final topic, we want to share again, maybe put a disclaimer out loud here that this is not a podcast for financial education. So please do your own homework, and please do not take our opinions and invest directly into any financial markets. Please do your own homework, consult with our consultants and brokers. Okay, let's talk a little bit about this. Now, why do we want to talk about this is because of course, there's a lot of differing views and stuff, but I think it's a very interesting topic that maybe in a short 3 years' time, when we look back at this episode, then we might realize the value of this episode. So, just a hint. Okay. Sure. Okay, I need to show this graph again. This is, in my own opinion, based on my research and study about this particular technology. And in short, if you were to ask me what is Bitcoin, Bitcoin is a software, is a peer-to-peer network, and is one of the most advanced form of money ever invented. It is also the first monetary currency that is fixed in supply, and it is fully decentralized. That means it is not a token. It is not a cryptocurrency that's being created by a founder or a CEO or a board of directors that's managing it. There's no way to increase the supply because the person who wrote the code technically disappeared and gave up the rights to do anything with the code. So now this technology, this software belongs to every user that owns Bitcoin. So technically speaking, it is a full-blown decentralized peer-to-peer network. But the most interesting thing is that there are two key aspects. Number one, it is fully decentralized, meaning that nobody controls it anymore. If you own it, you control it through the node, through the coding software. And of course, it's being being backed by blockchain in the sense that there's when you do a transaction, let's say instantaneously, whether you sell or buy, it's being verified both ends by the peers and by all the nodes that actually technically controls the code. Secondly is that the supply is fixed at 21 million. At this point of recording, the supply of Bitcoin is at 19 million. There is this thing called a halving that will happen. And of course, with every halving, the supply and the mining portion drops in terms of the quantity of Bitcoin that can be created every minute, every second. So in my own research, this technology basically has one of the most inelastic supply on price to quantity. It also has what we call scalability through time and space, in a sense that when you transact cross-border, is fantastic because the loss of its value is very minimum. I mean, for example, in the past, if I want to ship gold from Singapore to another country, it's impossible for me to ship so many gold over there, right? So technically speaking, this is like a digital gold. And maybe just to share a little bit of news with that, let's have a look at this. Why was it that there was this rise over the past 1 month when the bank situation decelerated in some of the banks that we just talked about? Was it because of a flight to safety, right? Number two, if you look at this, 1,200 German banks now can now offer Bitcoin trading to their retail customers. Of course, there's adoption as well. And of course, now I think this technology has been in the market for about 12 years already. Maybe let's talk a little bit to our Bitcoin maximalist, Kaiwan. Talk a little bit about this. Why do you invest in Bitcoin? What have you learned about that? Maybe let's go over there.
Because I asked him to invest in Bitcoin.
No, I didn't. I just one day walked past his desk, then he was like looking at the
Kaiwan
Bitcoin
is the one
pricing.
that tell Melvin to invest.
So he was not editing our videos, he was looking at the Bitcoin pricing.
No, I'm still editing.
Just kidding lah. Okay. Why do you invest in Bitcoin? Take a seat. Sit on Daniel's lap. It's fine. Daniel is strong.
Because I believe in Bitcoin's future, because I think in the future Bitcoin will fully replace all currency, including USD, SGD, Malaysian ringgit.
When do you start to do research on this?
Actually, I start buying because I thought it can make me rich. For first I'm gonna be honest, and then I look more into it. I was like, oh, this may really change the future. This might really be something important to me. Yes. Then I start invest in it. Yeah.
All right. Thanks for sharing. Yeah, you were saying something.
No, as in like, imagine like if let's say you know like, a lot of like young people that is younger than me, like you know like things that way, right? In terms of like a common mentality, right? So the demand becomes very strong.
As in what kind of mentality? Like
no, as in generally, as in like their adoption rate, you know, like they are more open to like virtual items, right? And because of this one becomes like, you know, like how like new things that we adopt very quickly, let's say in our generation compared to our parents' generation. But I'm younger than Melvin.
How are you? Tell all this.
People say no, I'm 35. Yeah.
Why are you so transparent about your age? You should keep it a secret.
Okay. Let's
It's too late already. Okay. So what do you think about Bitcoin?
So what do I think about Bitcoin? I believe actually I have some asset allocation in Bitcoin.
Oh, when did you start it? What did you tell me?
Yeah, because mine was in FTX.
Oh my goodness. Okay,
yeah.
I'm so sorry to hear that. Okay, it's okay.
No problem. You can give me some bonuses to equate my losses. I think that
you should have called me about what exchange or platform to use.
Yeah, I mean like you introduced me Koi Hako. Like I was like, such a small exchange. So I go to the big one, FTX. And
this is regulated by MAS. Hey, you should get the referral link from me. Do you install already?
And no, the important thing was I was having COVID. And then it bankrupt when I was having COVID. And so I was just in bed. I didn't like pay any attention. And then when I recovered, bankrupt already. Then the app cannot even log in.
But do you have a lot there? Oh, okay.
I mean, it's like 5% allocation. Yeah.
It's okay. I got confidence you'll earn it back.
That's why it's working hard.
From a very simple thing is that, of course, number one, money always flows, right? And I think like this also shows like, you know, when money is, of course, number one, there is injection from Fed to the banking system. If you were to withdraw your money out, if whether you are like a retail owner or you're a business owner, then you got to think, okay, where after you draw, where are you going to put your money in? Right? It has got to flow to some form of asset class, right? That is like liquid. And of course, I think like from a Bitcoin perspective, it's like a gold equivalent from a cryptocurrency angle. Like you mentioned, limited supply. It's mainly more like what is for me, my very basic understanding of crypto is like this is more like the store of wealth version.
Right.
Of course, other cryptos can have other like more interesting functions. Yeah.
Right. And of course, there's one more thing is that
but interestingly, in the same 10 days, right, gold only went up by less than 10%.
Fantastic.
And this one actually went up by 80%.
Yeah. And the trading of it is 24/7. Yeah, compared to the conventional trading platform equities. So, but share with us again, when did you start buying Bitcoin?
I think in late 2021, I was late to the game.
It's okay. No, it's still early.
Yeah. Now I'm back to ground zero because I have zero exposure at the moment.
28,000 is a fabulous price. When we look back 3 years later, this is
not financial advice by Melvin.
okay. How about Marc?
No, just refresh, right? I think Bitcoin, there was a point where you can use Bitcoin to buy Teslas, right? Like the car. Right. Was it in Singapore?
It was a while only.
Well, short while lah. Okay. But anyway, I mean it's you can buy a physical car with it. So
Elon Musk actually like push up the Bitcoin price, then after that he pull out again.
One of our teammates just bought a Tesla and sold a Tesla and then $40,000.
Sure.
Just by buying a Tesla, waiting for many months, drove it for a week.
So it's a good debt lah.
And sold it.
No, it's like basically this
is like a TOP project.
This is the same concept as like like the new launch project, right? You buy and then you wait for somebody who cannot wait.
Yeah.
And then you sell it to somebody that
at a premium
wants that property at a premium.
And don't want to wait.
Yeah.
So
But of course,
the buyer don't want to wait.
You must buy the correct product. So Tesla right now is like the good property.
The new
right?
launch.
You must make
it's
sure
a good new launch, right?
No, you must make sure you choose the correct color. The wheels, the rims are correct. The inside seats are a good color, so you can sell at higher price.
Awesome.
And you need to have the holding power as well.
Awesome.
3 to 6 months.
Yeah, so this is all the methodology that we promote and abide by in PLB.
Stop it. Okay.
Back to the
George,
question, yeah.
last person. What do you think about Bitcoin?
I think
you do any research on it?
I did read up a bit on Bitcoin. So unlike equities, it is not backed by any security. So it is based on individuals' perception of this cryptocurrency. I think in future, in the long run, it depends on the market adoption and what are the use cases that you can use the Bitcoin for. There are some theories that relates Bitcoins to investment as though it is like a greater fool's theory where you are selling to someone that think that there will be a higher valuation. So I think it depends on your perception of Bitcoin, whether will it get a lot of market adoption. But I think recently what we are seeing is also because interest rates. Do you think there's a correlation between interest rates and Bitcoin?
For now, because my opinion is that though it's been 12 years, but a lot of people are still very new to this. Yeah, but of course, if you look at market cap, it has increased tremendously over the past couple of years.
Yep.
I think as anyway, in US, this is now categorized as it's not as what do they mean? It's not equity. It's categorized by SEC or something. Yeah, as a commodity. Okay, so SEC chair says Bitcoin is not a security. Now, when you buy stocks and shares of listed company, you have to understand that companies have the ability to issue more shares. Companies can do shares buyback. That is a little bit like the Fed Reserve printing money. So when you own a share, when a company issues more share, your share value dilutes.
Yep.
So this is something that you have to note because it is still controlled by somebody. Right.
You can have stock split.
Yeah, it's still controlled by somebody.
Tesla.
So this is basically it's very different because now I mean, what's happening in US is that Bitcoin now is also seen like a collateral that you can actually loan against your Bitcoin. It's a little bit like in Singapore, your properties, you can do equity term loan, something like that. Yeah, but of course, it's still a very new topic. We will dive in on future banter episodes. So end of the day, George, will you buy Bitcoin?
No.
Great.
I won't buy.
How about you, Rong? Will you continue to buy?
We can discuss later on how you can transfer some funds over. Then I can use your referral link to open a
fantastic.
new crypto.
Means you have
I'm one of the referral links, so he knows when I buy a
Hey, don't
Bitcoin.
undercut me.
No, the referral link is only what, $10, right? Or something like
I
what?
don't know.
Every dollar counts.
Great. So we need to save this episode because in 3 years' time, we need to look at the price of Bitcoin. So right now is the year 2023, March 30th. Save this episode. 3 years' time, 2026, March 30th. Let's replay back.
What's your prediction, Melvin?
Of course, it's not financial advice.
Yeah,
but,
I know. It's
okay.
opinion. It's opinion.
My opinion is that you will at least 5x in 3 years' time. At least. From today's price.
How does Bitcoin compare to a landed property?
I think it's going to be one of the greatest hedge against inflation of all time. That means if somebody has fully studied Bitcoin, believes in it, it can be two things. You'll have two very strong assets that will be growing. That means if you invest in real estate, Bitcoin, it hedges against inflation together. And it can build your down payment fast. Yeah. So basically that's my opinion.
I think if we were to combine both together, I think the right asset allocation is important. So number one is that like potentially you can have high growth.
Yes.
But of course your worst case scenario is it can still go to zero, even though it is the most established kind of cryptocurrency. And that's why I think like when your portfolio has like a good foundational growth, like for example, like usually what we advocate is like good properties.
Right.
It allows you to make better diversification and asset allocation across like your stocks, equities, as well as cryptocurrency.
Great. Awesome. Now, to end off, watch this episode. I just finished this episode, fantastic episode, talking about the future of why it can pair up with real estate. And this is a very interesting episode that can probably open up your perspective a little bit. And all right, we'll come to the end of today's banter. How long do we take?
Long.
1 hour 49 minutes. Oh my goodness.
The first 45 minutes is essentially just
Talking about
floating,
TikTok.
just floating
Floating around. No, it's all planned. And of course, we spent about 10 minutes on the curtain, 5 minutes on the nuggets. We made a call for 10 minutes. Marc went to the toilet.
That's not true.
So after we minus off everything, it's about 1 hour. Lah. Should be
It's
okay.
not-
Let's give a round of applause to our media team again. Our NOTG crew. Special guests that are here. Great, of course, to Marc, first time here. Awesome. All right, so welcome to the end of our banter episode. We hope that you enjoy this particular series that we have. And do remember to sign up for our webinars. If you have not been to one, we're going to have another, close to about 17 webinars upcoming. And also, the latest landed convention that will be happening mid of this year. Plus, of course, if you are very keen to understand more about our different channels, you can head on to PLB Insights, you can head on to Property Limbras main YouTube channel, as well as head on to our website on propertylimbras.com. We'll see you on the next NOTG banter. Alright, so welcome to our NOTG.
NOTG.
You should watch Captain Planet lah.
I know.
Captain
So.
Planet
He's the hero. Gonna take me down to
Why am I here?